There are 5 families you've never heard of who control more wealth than most countries. They don't appear on Forbes lists, they don't give interviews, they don't need to. Because 200 years ago, their ancestors built the foundation of the modern financial system. And that system ensures they stay on top permanently. The Rothschilds, the Warburgs, the Schiffs, the Morgans, the Rockefellers. Between 1810 and 1913, these 5 dynasties engineered the infrastructure of global finance, central banks, stock exchanges, government debt markets, currency systems, the entire architecture of how money moves, who controls it, and where it flows. This isn't conspiracy theory. This is documented history. The meetings happened. The contracts exist. The institutions they created still run the world. And here's what they understood that everyone else missed. You don't get rich by making money. You get rich by controlling the system that creates money. You don't compete in the market. You own the market. You don't play the game. You write the rules. This is the story of how 5 families took control of the global financial system, how they coordinated across borders and centuries, and why their descendants still benefit from the architecture built generations ago. Let me show you exactly how they did it, and why understanding their playbook is the only way to understand how power actually works. The foundation, the Rothschild innovation. The story begins in Frankfurt, Germany, 1744. Meyer Amschel Rothschild was born into a Jewish ghetto. His father was a money changer and trader. Nothing remarkable, just another merchant family struggling under restrictions. But Meyer had an insight that would change history. Money doesn't have to be in one place. It can move, and whoever controls the movement of money controls nations. In the 1760s, Meyer started working for Prince William of Hanau, managing his fortune. He learned how the aristocracy moved money, hid money, multiplied money, and he saw an opportunity. Europe was constantly at war, and wars needed financing. Governments borrowed to pay armies. Whoever could arrange those loans, whoever could move gold across borders safely, whoever could finance both sides would become indispensable. Meyer had 5 sons: Amschel, Salomon, Nathan, Karl, and James. In 1810, he sent them to 5 European capitals: Frankfurt, Vienna, London, Naples, and Paris. Each son would establish a bank, and together the 5 banks would function as one network. This was the innovation, a financial network that transcended borders, that could move money faster than governments, that could communicate through private courier systems faster than official channels. By 1815, the Rothschild network was operational, and they used it to dominate the biggest financial event of the century, the financing of the Napoleonic Wars. Nathan Rothschild, based in London, arranged loans for Britain, but he also maintained relationships with French financiers. The Rothschilds didn't pick sides. They financed both sides, because whoever won would need to repay the loans. In 1815, at the Battle of Waterloo, Nathan Rothschild's courier network gave him information about Napoleon's defeat a full day before the British government knew. He used that information to manipulate the bond market, sold British bonds, signaling defeat. Prices crashed. Then he bought massive quantities at rock bottom. When official news arrived the next day, bond prices soared. Nathan made millions. But more importantly, he demonstrated something crucial. Information is power, and a private network with faster information than governments can control markets. By 1820, the Rothschild family was financing governments across Europe. They arranged loans for Prussia, Austria, France, Britain, Russia. When governments needed money, they went to the Rothschilds. And here's the key. The Rothschilds didn't just lend money. They structured the deals. They set the terms. They determined interest rates. They decided which governments could borrow and which couldn't. This is stage 1 of financial control. Don't compete with governments. Become the mechanism through which governments access money. Make yourself indispensable. By 1850, the Rothschild family controlled more wealth than any royal family in Europe, and they'd created the template: a coordinated banking network, information advantage, government dependence. This was the blueprint. Every other dynasty would follow. The expansion, the Warburg connection. In the mid-1800s, a second family emerged in Germany, the Warburgs. They started in Hamburg as merchants and money changers, modest beginnings, but they saw what the Rothschilds had built, and they wanted in. Paul Warburg and his brother Felix would become the architects of the American financial system. But first, they needed to connect the European banking network to the emerging American market. In 1895, Paul Warburg married Nina Loeb, daughter of Solomon Loeb, co-founder of Kuhn, Loeb and Company, one of the most powerful investment banks in America. Felix Warburg married Frieda Schiff, daughter of Jacob Schiff, the other partner at Kuhn, Loeb and Company. 2 marriages, 2 connections, and suddenly the Warburg family had a direct bridge between European banking and American finance. This is how dynasties work. Strategic marriages, business alliances, interlocking partnerships. They don't compete. They consolidate. Jacob Schiff himself was already a major player. He'd financed the expansion of American railroads. He'd arranged loans for John D. Rockefeller's Standard Oil, and he'd become one of the primary financiers of the US government. But Schiff saw a problem. America didn't have a central bank. The money supply was chaotic. Banks operated independently. During panics, the system collapsed. And here's what Schiff understood. Chaos is bad for banking because chaos means risk, and risk means losses. What banking dynasties need is stability, predictability, control. Paul Warburg arrived in America with a mission: create a central bank. And he had the blueprint from Europe: the Bank of England, the Reichsbank, the Banque de France. Central banks that controlled money supply, set interest rates, and ensured that private banks always had liquidity. But there was a problem. Americans hated central banks. The first bank of the United States had been shut down in 1811. The second bank had been destroyed by Andrew Jackson in 1836. Any proposal for a central bank would face massive opposition. So Warburg and Schiff crafted a strategy. Don't call it a central bank, call it a Federal Reserve System. Make it look decentralized, democratic, public, but structure it so private banks maintain control. This is stage 2. When direct control is impossible, create the illusion of public control while maintaining private authority. The COUP, the Jekyll Island meeting in November 1910, the most important secret meeting in American financial history, took place on Jekyll Island, Georgia. 7 men arrived separately, using only first names to avoid recognition. Senator Nelson Aldrich, chairman of the National Monetary Commission. Frank Vanderlip, president of National City Bank of New York, representing the Rockefeller interests. Henry Davison, senior partner at J.P. Morgan and Company. Charles Norton, president of First National Bank of New York. Benjamin Strong, vice president of Bankers Trust, another Morgan company. Paul Warburg, partner at Kuhn, Loeb and Company, and A. Piet Andrew, assistant secretary of the Treasury. These 7 men represented approximately 1/4 of the world's wealth, and they were there to design America's central bank. For 9 days, they worked in secret. No press, no public, no congressional oversight. They drafted legislation that would become the Federal Reserve Act. Paul Warburg wrote most of it. He'd studied European central banks for decades. He knew exactly what structure would work. 12 regional banks to create the illusion of decentralization. A board of governors appointed by the president to create the illusion of public control. But the regional banks would be privately owned by member banks. And the most important regional bank, the Federal Reserve Bank of New York, would be controlled by the same dynasties that had organized the Jekyll Island meeting. The structure was brilliant. It looked public. It functioned private. The government appointed governors. But the private banks elected regional boards. The private banks owned shares in the Federal Reserve. And the Federal Reserve Bank of New York, the one that actually conducted operations, buying and selling government bonds, managing the money supply, that bank would be controlled by J.P. Morgan, the Rockefellers, Kuhn, Loeb, and their allies. The Federal Reserve Act passed Congress in December 1913. Most representatives didn't understand what they were voting for. Many had left for Christmas break. It passed because banking interests lobbied intensely, because Warburg and Schiff had spent 3 years building political support, and because the 1907 financial panic was still fresh in everyone's memory. The dynasties had won. They had created a central bank that looked public but functioned as a private cartel, a system that would ensure they could never fail, because now they controlled the money supply. This is stage 3. When you control the money supply, you control everything. You control interest rates. You control which industries get funded. You control which governments can borrow. You control the entire economy. The alliance, Morgan and Rockefeller, while the Rothschilds, Warburgs, and Schiffs were building the banking infrastructure, 2 American dynasties were consolidating industrial and financial power, the Morgans and the Rockefellers. J.P. Morgan wasn't just a banker. He was a coordinating force. He organized industries, consolidated competitors, eliminated chaos. In the 1890s, Morgan restructured the railroad industry. Bankrupt railroads everywhere. Cutthroat competition. Morgan forced consolidation, eliminated redundant lines, created regional monopolies, and financed the whole operation. In 1901, Morgan created U.S. Steel, the first billion-dollar corporation. He bought Andrew Carnegie's steel empire for $480 million and merged it with dozens of smaller steel companies. Instant monopoly. But Morgan's real power was coordination. He was the central node. When industries needed financing, they went to Morgan. When the government needed loans, they went to Morgan. When banks faced collapse, Morgan organized the rescue. In 1907, a financial panic threatened to destroy the American banking system. Banks were failing. Depositors were panicking. The government had no mechanism to respond. J.P. Morgan, then 70 years old, personally organized the bailout. He locked the major New York bankers in his library, told them they couldn't leave until they pledged their own money to stabilize failing banks. He decided which banks would be saved and which would be allowed to fail. It worked. The panic ended. Morgan became a hero. But more importantly, he demonstrated that private banking interests, not the government, controlled the system. This was the justification for the Federal Reserve. The argument was, we can't rely on one man to save the system. We need an institution. But the institution they created was controlled by the same interests Morgan represented. Meanwhile, John D. Rockefeller was building the other pillar of dynastic power, oil. By 1900, Standard Oil controlled 90% of America's oil refining. Rockefeller was the richest man in the world. But Rockefeller wasn't just an industrialist. He was a financier. He created the modern foundation system, tax-exempt organizations that funded education, medicine, research, but also shaped policy, influenced universities, and ensured that the next generation would be trained in systems that benefited Rockefeller interests. The Rockefeller Foundation, created in 1913, funded medical schools. But not all approaches to medicine. They funded pharmaceutical-focused medical education. Why? Because Rockefeller owned pharmaceutical companies. The foundation shaped medical education to create demand for Rockefeller products. This is stage 4. Use philanthropy to shape policy, education, and culture. Make your influence permanent by controlling what the next generation learns and believes. By 1920, the 5 dynasties, Rothschild, Warburg, Schiff, Morgan, Rockefeller, controlled the architecture of global finance, central banks, government debt markets, industrial monopolies, educational systems, everything. The network, how they coordinate. Here's what most people don't understand about these dynasties. They don't compete, they coordinate. The Rothschilds and Warburgs intermarried. The Schiffs and Warburgs intermarried. Morgan and Rockefeller co-invested in railroads, steel, and banks. They sat on each other's boards. They shared information. They divided territories. When the Federal Reserve Bank of New York was established, who controlled it? J.P. Morgan and Company, Kuhn Loeb and Company, representing the Schiffs and Warburgs, and National City Bank, representing the Rockefellers. The 3 dynasties split control. This isn't conspiracy, it's coordination. It's how power actually works. Elites cooperate to maintain their position. They compete at the margins, but they unite to defend the system that benefits them all. Let me show you a specific example. The financing of World War I. Britain and France needed billions to fight Germany. Who arranged the loans? J.P. Morgan and Company. They organized a $500 million loan in 1915, the largest foreign loan in American history at that time. But who actually bought the bonds? American banks and wealthy individuals. Who profited from the interest? The dynasties that structured the deal. And when Germany needed financing, the Warburg family had branches in both Germany and America. Max Warburg ran the German branch. Paul Warburg ran the American branch. The family was financing both sides of the war. This is the genius of the system. The dynasties don't care who wins the war. They care that governments borrow to fight the war, because governments always repay loans with interest extracted from taxpayers. After World War I, the dynasties arranged the Reconstruction loans. The Dawes Plan in 1924, arranged by J.P. Morgan and Company, lent Germany money to rebuild and pay reparations. Where did Germany pay the reparations? To Britain and France. And what did Britain and France do with that money? Repay their war loans to American banks. The money flowed in a circle. German taxpayers paid reparations. British and French taxpayers paid war debts. American banks collected interest. And the dynasties that structured the system took a cut at every step. This is the network. Money flows in loops, and at every point where money changes hands, the dynasties extract value. The consolidation, post-World War. World War II destroyed Europe's economy, but it didn't destroy the dynasties. It strengthened them. In 1944, representatives from 44 countries met at Bretton Woods, New Hampshire, to design the post-war financial system. Who advised the American delegation? Members of the Rockefeller Foundation, J.P. Morgan Partners, Council on Foreign Relations members, an organization founded and funded by the Dynasties. The Bretton Woods system established the dollar as the global reserve currency. Every country would peg their currency to the dollar. The dollar would be backed by gold, and the International Monetary Fund and World Bank would manage the system. Who controlled the IMF and World Bank? Voting power was based on financial contributions. The U.S. had the largest share. And who controlled U.S. financial policy? The Federal Reserve and Treasury, both staffed by dynasty-connected banks. This is stage 5. Control the international financial architecture. Make the dollar the center of the system and ensure that every country that wants to trade must go through institutions you control. By 1950, the dynasties had achieved total financial architecture control. Central banks in every major country, government debt markets that ensured constant demand for bonds, international institutions that enforced the system globally, and a reserve currency that gave America, and by extension, American banks, power over global trade. The modern system, how it works today, the original patriarchs are dead. J.P. Morgan died in 1913. John D. Rockefeller died in 1937. Jacob Schiff died in 1920. The original Rothschilds and Warburgs, long gone. But the system they built is stronger than ever, because the system doesn't depend on individuals. It depends on structure, and the structure is permanent. Let's trace how the system works today. The Federal Reserve, created by the dynasties in 1913, still exists. It's still structured the same way. Regional banks owned by private member banks, a board of governors appointed by the president but functionally independent. Who runs the Federal Reserve Bank of New York, the most important branch? Former Goldman Sachs executives, former J.P. Morgan executives, former BlackRock executives. The same institutions that descend from the original dynasties. J.P. Morgan Chase, the modern incarnation of J.P. Morgan and Company, is the largest bank in America, $3.7 trillion in assets. When banks fail, J.P. Morgan buys them. When the government needs a bailout coordinated, J.P. Morgan organizes it, just like J.P. Morgan did in 1907. The Rockefeller family no longer controls Standard Oil. It was broken up in 1911, but the successor companies, ExxonMobil, Chevron, BP, are still dominant, and the Rockefeller Foundation still shapes policy through grants, influence, and coordination with other elite institutions. The Rothschild banking houses still exist. They're private now. They don't publish their assets, but they manage wealth for governments, billionaires, and corporations. They're advisors on mergers, privatizations, and sovereign debt. The Warburg family integrated into Wall Street. Their descendants sit on boards, advise funds, manage fortunes, still connected, still influential. This is the modern incarnation. The dynasties don't need to be visible. They don't need Forbes rankings because they own the infrastructure. They control the Federal Reserve through the banks that own shares. They control the IMF through voting shares and advisory roles. They control policy through foundations and think tanks. When the 2008 financial crisis hit, who got bailed out? The banks. $700 billion from taxpayers. Who decided how the bailout would work? Well, former Goldman Sachs executives running the Treasury. Who benefited? J.P. Morgan, Goldman Sachs. The institutions descended from the dynasties. The system protected itself, just like it was designed to do. The playbook, what they understood. Let me break down the dynasty playbook, because once you see it, you'll recognize it everywhere. Rule 1. Control the system, not the assets. The dynasties don't need to own every company. They just need to control the financial system that all companies depend on. Control the banks, control the currency, control the interest rates, and you control everything. Rule 2. Coordinate across borders. The Rothschild network operated in 5 countries simultaneously. This gave them information advantage, arbitrage opportunities, and immunity from any single government. Modern dynasties do the same. Offshore accounts, international banks, global networks. Xavier, Rule 3. Make yourself indispensable to governments. Governments need money. If you're the source of that money, you're untouchable. The dynasties financed wars, arranged loans, managed debts. Governments couldn't function without them. Rule 4. Use crises to consolidate. Every financial panic, every war, every crisis, the dynasties used it to consolidate. The 1907 panic led to the Federal Reserve. The 2008 crisis led to more bank consolidation. J.P. Morgan buying Bear Stearns and Washington Mutual. Bank of America buying Merrill Lynch. Crises eliminate competitors. Rule 5. Control what people learn. The Rockefeller Foundation shaped medical education. The Dynasties fund universities, think tanks, research institutions. They don't censor. They don't need to. They fund what supports their interests and ignore what doesn't. This is the playbook, and it's been running for 200 years. Can it be broken? So here's the question. Can this system be broken, or is it permanent? The Dynasties built a system that's self-reinforcing. Central banks create money that flows to governments and corporations. Governments repay with taxpayer money. Corporations pay interest to banks. Banks are owned by descendants of the dynasties or institutions they control. The loop is closed, and every attempt to break it has failed. Andrew Jackson destroyed the second bank of the United States in 1836. By 1913, the dynasties had created the Federal Reserve, stronger than before. The Sherman Antitrust Act broke up Standard Oil in 1911. The Rockefellers made more money from the breakup than they did from the monopoly, and the pieces eventually reconsolidated. Bretton Woods collapsed in 1971 when Nixon closed the gold window, but the dollar remained the reserve currency. The system adapted. Every time the system is challenged, it survives, because the dynasties don't defend individual pieces. They defend the structure, and the structure is embedded in law, institutions, international agreements. Breaking the system would require dismantling central banks, ending government debt financing, creating alternative currencies, and building new financial architecture from scratch. That's not impossible, but it would require coordination and will that doesn't currently exist. In 1810, Mayor Amschel Rothschild sent his 5 sons to 5 European capitals. By 1913, their descendants and allied dynasties, the Warburgs, Schiffs, Morgans, Rockefellers, had created the Federal Reserve and controlled the global financial system. They didn't do it through force. They did it through coordination, strategic marriages, crisis exploitation, and building institutions that would outlive them. Today, 200 years later, the system they built is stronger than ever. The central banks, the government debt markets, the international financial institutions, the network of elite banks and foundations. All of it traces back to the architecture designed by 5 families. This isn't hidden, it's documented. The Jekyll Island meeting happened. The Federal Reserve Act is public record. The foundations exist. The banks are listed companies, but nobody connects the dots. Nobody asks why the same institutions, descended from the same dynasties, continue to dominate. Nobody questions why every financial crisis strengthens the banks instead of destroying them. The dynasties understood something most people never learn. Power isn't about being the richest person. It's about controlling the system that determines who gets rich. You don't need to own every factory. You just need to control the bank that finances factories. You don't need to win every war. You just need to finance both sides. You don't need to be visible. You just need to be indispensable. 5 families, 200 years, one system, and you live inside it every single day.